Welcome everyone, Simon here from the Whales of Wall Street. It's been a while since my last video. Today we're just going to be talking a very quick recap on the RTGS system and the ISO 222 compliance, which combined are going live on the 5th of November. We've been anticipating this for some time. In fact, those that do return to the channel frequently may sometimes see the video that I placed. It was a few years ago that I did this one now. If you want a big quick reminder of this topic in detail from the very beginning, you can check that video out. But for more so in the modern times, you can of course check out some of the most recent videos that I've done. But for this topic in particular, we're going to be discussing in terms of what RTGS and the ISO 222 aspects mean for the crypto world. What can we expect from the stablecoin aspirations to some of the crypto assets that we may or may not hold in our portfolios? How this can intertwine as the financial system and the financial age changes forever from next month onwards. So most people watching the crypto markets right now are looking at the charts, but the biggest change coming to money isn't happening on these exchanges. So I do my best to of course do chart analysis where possible, but ultimately this channel and what I'm about really is the educational piece. I think these are important fundamentals that you understand what you're investing in, or also the trends and things that are going on outside of the exchanges. So this is happening inside the banks worldwide right now, and particularly this topic today, we're focused on the Bank of England. So for those outside of the UK, you would have your own governmental or banking systems federations. So Fed Reserve, for example, in the US is probably the equivalent of Bank of England, I think. But yeah, these guys are essentially in charge, supposedly, of interest rates, inflation, other banking decisions, as you can imagine. And we'll talk about the RTGS system in particular. This is the real-time gross settlement. So we'll talk about that now on the 5th of November, as per the previous video that we did many years ago, and something that I try to remind people of as we go along. In the UK, we flipped the switch on for this new system. Now, actually, this started in April this year, earlier this year. What happens on the 5th of November is when the ISO 222 compliance gets integrated with this, the whole entire messaging system of the financial system infrastructure changes. So it sounds a bit dry and perhaps overly technical to some people. Sometimes it even boggles my mind still to think about some of this aspect, but this is essentially the backbone of how trillions of pounds move every single day between banks. Why does that matter? Well, when the core of the financial system becomes faster and smarter and more open, it can reshape the ground that crypto stands on. So what we mean by this is that we are absolutely going to improve how the financial system works in terms of validation, processing, etc. Just to be clear, the RTGS system has no direct narrative to suggest that it's using blockchain in this infrastructure change. However, there are multiple narratives throughout Bank of England's scriptures, narratives, etc., that mention of the ability to have a platform to utilize potentially DLT in the future, i.e. distributed ledger technology, i.e. blockchain, and certain assets will be compliant with these. I think maybe we've done a few videos in the past on ISO 222 compliance. If you remember a couple of years ago, the market was almost dictated to with certain assets being moved up in price based on this narrative as well. Everyone was rushing to see which ones would be most compliant, future-proof ready, etc. That died off a bit of a bubble quite quickly, but the fundamental principles is something that I've always carried with me, that when I'm holding some of these legacy projects in my portfolio and technologies, these are ones that are going to be heavily influencing the financial structure. So this isn't just another payment upgrade, it's the start of a race, in my opinion. So this is between central bank money that's going digital. So we talked about stablecoins, central bank digital currencies, etc. And this is going against decentralized money, i.e. trying to stay relevant in this moment in time. Now, I'm going to put this into print. And by the way, I will put links to each of these pages in the description below if you want to do your own further research. But one of my critique points in the aspect of crypto right now is I think we're losing a decentralized battle. There are a couple of assets, things like Bitcoin that are supposedly decentralized, even if you believe or don't believe at this moment in time, who actually created Bitcoin. Was it even a government scheme worldwide to get more money value in somewhere and manipulate it, or you basically put it back in the system at some point in the future and make it maybe socially impossible for us to actually even use crypto? It's just another way of holding the money. But that aside, that is a theory, maybe another topic video for another day. But we are now on a crossroad. We're on a crossroad in the sense that stablecoins and CBDCs, let's remove CBDCs out of the equation for now. I do believe they will come, or they will be reformatted based on the stablecoins principles. Programmable money, controllable money, etc. Remains to be seen. But there are some projects out there. So, for example, you could argue Ethereum as a big platform, of course. XRP is very renowned in the financial world of creating those cross-border financial payments quicker, faster, with less cost, bridging banks, things like Quant, as an example. We can unpack what's really going on, what it means for these stablecoins, XRP, Ethereum, the wider crypto world. There's so many assets, I can't name them all. We'll be here forever. But yes, going back to RTGS, so the real-time gross settlement, this is the system that banks use to settle payments directly with each other. So instantly and finally. You may have heard of finality as a word in the financial world as well. So this is done through the accounts held at the Bank of England. So you can think of this as a country's ultimate ledger, okay? Every mortgage transfer, corporate payroll, interbank loan, payments in general, it all clears through here. So the new platform, which is also, I believe, named RT2, went live earlier this year, as we mentioned, so around April time, and it replaces decades old, I think it's like 25 years old or something, with modern modular core built for 24/7 resilience. So it's faster, more secure, designed to plug into future innovations. That's the critical point here, future innovations, where we start talking about the potential opportunity for wider interoperability and the ability to utilize technologies, for example, like blockchain for speed, transfers per second, transactions per second, finality, processing, validating, etc., let alone AI on top of that. I mean, this is crazy, right? So on November the 5th, the system gets its first major upgrade, which is the full move to the 222 ISO compliance, which is the global payments language that adds richer data for every transaction, which means traceability, transparency, compatibility. Isn't this interesting that these familiarize themselves with the likes of blockchain and what we talked about recently in the world news, of course, talking about digital IDs, stablecoins, programmable money, traceable money, the ability to go into banks without permissions. It's very interesting that it's happened all at the same time. Not coincidentally, we talked about this for many years. It's part of the plan. There should be no surprises unless you're completely new to this topic overall. So the foundations, essentially, of tokenized finance are on our doorstep. So why should crypto care? Well, as I said, there's a multitude of different areas that crypto can come into. And when I talk about crypto, I'm not talking about the actual, specifically, a lot of the crypto assets out there. I'm talking about the structures, for example, stablecoins. Crypto assets in certain aspects, for sure, will be utilized in these areas as well. So what's going to happen really with the likes of Bitcoin, Ethereum, XRP, many others? A lot can happen for sure. So crypto, of course, was built on a simple promise of faster, cheaper, borderless money. To some extent, it's decentralized. But once central bank money can move in real time around the clock with programmable data attached, that advantage starts to fade. So that isn't a threat, it's an invitation. This is where I'm trying to grasp the concept for everyone of crypto's role moving forward. There are so many narratives in crypto for the last 10, 20 years, right? But because the new RTGS framework has been explicitly designed to connect with distributed ledger systems in the future, irrespective of whether it's directly narrated or not in documentations, this is what it was arguably built for, the digital frontier in finance. So the Bank of England calls this the synchronization. This is where I was talking about earlier. There are no direct words about blockchain, but the wording, the infrastructure wording, is very clear. The ability for cash and tokenized assets to settle together autonomously, synchronized simultaneously. So imagine sending tokenized bonds or real world assets and having central bank money move alongside them in seconds. No intermediaries, no delays, and very little cost. This can increase the economy, the speed at which transactions are done, finalizing credit, debit payments. The movement of money across the world, across banks, will be significant. So imagine sending all of those things so quickly, so fast, with little cost, what that could do for the economy. Now that's the bridge, in my opinion, between TradeFi and DeFi, and it's being built right now. It's literally on our doorstep. The years we've been waiting for this to occur. Now, alongside that comes things like the regulations. Who are the custodians? Who monitors this? Who regulates this, right? So, of course, we've got the FCA here in the UK. You've got America as well, of course, with their own things like the SEC, etc. Around the world, I mean, if you're from other countries, please do drop in the comments below what your equivalents are of FCA, SEC, etc. Because I know I can Google these things, but I always quite find it nice to hear from people around the world to educate me on some things as well. So this regulatory shift, alongside the tech upgrade, comes the legal upgrade. Okay, so we've done this. We've done a few videos in the past. We've even done some great interviews with, I think it's Professor Sarah Greener, I believe, I have to remind myself. And we did that video maybe a year or so ago. And we talked about the crypto regulations, the law around tokenized assets and things like this. They are still working on this, guys. Like, it's taking a long time because still people in the government parliamentary aspects don't understand it fully. So the UK's Financial Conduct Authority, or the FCA, published the consultation paper, I think it was 2514, setting rules for stablecoins and crypto custody. So this is something off the back of that video that we did. Not necessarily the back of that video, but it happened after that video in the sense of what we were talking about in that interview was what they were aiming towards, and that went live quite recently. So introduce hard requirements. So every stablecoin must be backed one-to-one with safe liquid assets. Redemption par value must be guaranteed, and custodians must segregate and safeguard client funds. So at the same time, the Bank of England will oversee any stablecoin considered systematic. So when we combine the RTGS overhaul with these regulations, you'll get something new. So arguably you'll get a regulated, programmable, interesting, money layer sitting right on top of the central bank infrastructure. That's not the end of crypto. I think that's crypto growing up. This is what we've been waiting for, right? So yes, of course, we always want to see assets growing as fast as we can. The price is going up all the time. But arguably, you've also got to understand we're invested in a technology that has been around for some time now, and it's just about to finally get fully integrated for at least the financial section. I think this is the most important sector in crypto blockchain. If you get this right, the rest will follow. Talk about real world assets, all the other crypto asset things, oracles, etc., will continue to flow forwards after that, of course. How far these prices go beyond today, I don't know. Could be a bubble. It could be something that's just progressively slow, and we've already had the big momentous, volatile increases in price over time. Who knows? But on the aspect of that, I do think this is where crypto is finally finding its feet. It's about to go from walking to running. Okay, so let's talk implications. Stablecoins first. We know, obviously, the last 12 months have been very interesting topics around stablecoins and CBDCs. They were talking about CBDCs kind of disappearing for a bit, or maybe not even happening at all. I don't believe that for a second. I think they've been on the back burners. I think they'll be focusing purely on the stablecoins for some time, because this is the most easiest part for them to integrate. So short term, tighter rules means slower issuance and higher compliance costs for stablecoin aspirations. But the long term, the winners, the ones that are fully transparent and FCA approved, will become trusted payment rails across Europe, in my opinion. So you can think of Circle, for example. You've now got obviously the Ripple's stablecoin. What is it? The RL PUSD. I can't remember what it's called. But whoever launches the first, GBP stablecoin under this new regime, could be the ones that really accelerate, in my opinion. Yes, okay, the dollar is obviously very important, but I think for the UK, the United Kingdom, this is obviously a huge market, especially with the RTGS, the financial hub of the world, arguably. This is where it gets really interesting. So payment tokens, like for example, XRP, XLM, so Stellar, XLM, arguably face a crossroad at this moment in time. So their core narrative has always been about fast, frictionless settlement. We mentioned that earlier, which now meets a competitor in traditional finance itself. So there's a big battle going on. Have the banks built a system, whether it's through Swift, for example, that's being upgraded, RTGS, have they got something that doesn't need blockchain? Well, this is where it gets very interesting. So the ones that adapt, like XRP have been doing for many years, for example, and this is not an XRP video, by the way, this is just me mentioning them because they're probably the prime suspects in financial upgrading, right, in the world. Linking it to regulated payment systems or offering liquidity bridges, they're the ones that survive, in my opinion. The ones that don't fade into the narrative history. I've seen it over and over for many years. So the infrastructure coins, there's so many of them, but ones in my portfolio in the past or recently or still today, things like Ethereum, Chainlink, fantastic Oracle, great to do some interviews with those over the years. Polkadot and other real world asset protocols, they could thrive because this new RTGS mirror of the model shares their aspiration and their missions as well. Tokenized assets, automating settlement, removing the friction. So this is where smart contract platforms, in my opinion, finally connect the real money, the real world money. So for the exchanges and custodians, this could get interesting for them, where regulation becomes the moat. Those that comply early will capture the institutional flow and everyone else will get left outside. So I think that not necessarily the exchanges will close down. I think they will find it a lot harder for maybe users to potentially use their platforms and therefore will go elsewhere. Or I do believe, I strongly believe this for many years, that banks will become custodians of crypto. So when that happens, a general user of finance or money who was always interested in crypto or holding these kind of things, whether it's through ETF stocks or just the ability, like you can do on PayPal, for example, and hold your money there and crypto assets, the bank could do it. You're opening the door to everyone. And then why do you need Binance? Why do you need KuCoin? All these platforms for crypto, when you could have something that's safeguarded by FCA or the SEC or whatever around the world in your own bank. So I think there's some really interesting things going on, which is why we have seen a lot of these exchanges applying themselves to law in their respective countries as soon as they possibly can to fight what's coming. Because I do think this centralized system is going to fully take over crypto, in my opinion. So what do we watch? What's the strategy behind all of this kind of thing? Well, as I said, we can talk about the stablecoins. That would really help us with some of the crypto assets, could maybe help us with some of the projects that are related to some of the stablecoins. But in general, I think that we need to kind of really consider, what do we do with this kind of information or what's coming? Well, personally, it's about keeping an eye on the dates for sure. November the 5th, that's the go live for the ISO compliance. Mid-November, I would anticipate Bank of England, the FCA, maybe some others around the world, doing their final consultations of stablecoin frameworks. Then we need to track the first GBP related stablecoin. I haven't seen any information out there to see who could win this race or if it's going to be a multiple number of projects or companies. But I think that will trigger a wave of adoption headlines. And this is where you talk about buy the rumors, sell the news. These headlines come out. I think this is the beginning stages. They'll creep through. Not many people will understand it. And that's why we're doing this kind of video, because it's so massive, guys. Like, if you can get ahead of this game and ahead of the thought process of what this all really means, come the time, 3 months, 6 months, 12 months, I don't know the exact time frame, when that comes out in the open to everyone and anyone who maybe didn't know about it or just sees the monetary value aspect of it. Oh, why is the market going up? Oh, it's because this has been turned on like a couple of months ago, or this, that, and the other. These are the moments we want to get ahead of the game, right? So we need to separate the narratives from infrastructure. Payment coins are event trades. The infrastructure projects are regulated stablecoins. Regulated stablecoins are structural plays. So there's two narratives there. And to position in the long term, this transition isn't about the hype, in my opinion. It's about the plumbing or the creation, the foundation of global money changing shape. So those who see the shift early, I think we can align our portfolios before the next cycle's narrative even begins. So to reflect, and as I said, I will leave the description in the description, these webpage links, because there's so much to absorb, guys. I can't do this in a whole video because, we might miss bits, but also I think it's important that everyone out there in the crypto sphere that is interested in finance and how crypto is actually really going to work in the real world, it's really important that you do your own research. So I'm going to give you the tools and you can go off and do your own research here. But my kind of final points here is marking those calendar kind of dates. But the RTGS renewal isn't front page news, in my opinion. It's going to be quiet, but it's foundational. It is fundamental. It's the silent evolution of money itself, the digital frontier in finance. So crypto began as an outsider. Now the establishment is adopting the technology, the speed, the transparency, the validation, the processing, but under a regulated roof. We've been calling for regulation. Some people won't like it because it may not speed up crypto as much as we thought it would price-wise, but technologically and adaptive and adaptation of these assets is really important to understand. And in fact, that's why I always hold the legacy projects, because these ones are the ones that will be utilized. So the question isn't whether crypto will integrate with the financial system, it's which parts of crypto will still matter once it does. So let me know what you think. Is this the start of the merge, the proper final merge between crypto and central bank rails, or the moment the banks take back control? And that is a defining question. I'm generally maybe haven't been doing so many videos about crypto because I've been doing so much research in the background. I'm really, doing a lot of thought process about life in general, because I think there are crazy things going on in the world that are mostly theatrical, but they have a secondary substance to them. The whole thought process of David Icke's, have a solution, create a problem, put your solution in, you get the control, many get money. I generally think that there's been a big delay in the crypto's evolution. The price points, for example, it has been manipulated, in my opinion, and it's for the banks to have caught up. They realized that they were losing money out of the systems to people's pockets to a decentralized format or keeping it off grid. They're clawing it back. They're forcing our hands to be regulated, to be fully KYC'd, and therefore that point at the very end that I just mentioned, do we think it's the moment banks take back control? Do they become the custodians? Does our money, even though we may have made money and profits, does it ultimately go back into the banks? HMRC, I mean, there's a great interesting video from Lewis Jackson as well, on your HMRC here in the UK, the regulators and the authority figure of tax, etc., going fully digital, fully integrated with our banks, fully integrated with our crypto. The timing, guys, this is not coincidence. It's systematic. So if you found this helpful, please do smash the like button. Make sure you subscribe if you haven't done so already. Join me on the post-launch deep dive once the system is live. We'll be doing that on the 5th of November, hopefully. We'll see what's going on. Not anticipating, as I said, many fluctuations in price of any movements in the markets. Could do, don't know. But it's the defining starting point, guys. Thanks for watching and welcome to the next phase of money.